In the world of finance, there are times that feel like geological plates moving quickly, and for a long time, it's possible that someone is here right now. SWIFT, which stands for Society for Worldwide Interbank Financial Telecommunication, is the main way that more than 11,000 banks around the world talk to each other and handle trillions of dollars in cross-border payments, trade, finance, and foreign exchange. Correspondent banking has been seen as the traditional way of doing business for a long time. It didn't want to use blockchain technologies because it didn't know much about cryptocurrencies and independent ledgers and wasn't interested in anything that might be a threat to its power. Many people in this world see Ripple and its cryptocurrency XRP as threats or outsider than groups that can work together. The question is, what happens if that connection changes? Is it possible that Swift and Ripple could work together behind the scenes after years of seeing each other as competitors? This story explores the idea that Swift is given in some ground, that a partnership with Ripple is either already happening or will happen soon, and that the XP's role is about to grow a lot, and in this case, price goals of 200,000 per XRP are not just talk. They're real possibilities. We will talk about what is known, what is unknown, and how this might impact people in business and the financial world as well as in their daily lives. Before we start, we should make sure we have a solid base. Swift has put out statements, news releases, and technical briefings that show the company is becoming more interested in the following areas. Using blockchains together, digital payment methods and asset tokenization can work together. Central banks from all over the world have worked with Swift to try what they call CB corridors, or to work on these corridors with them. That pretty much sums it up. These are ways that digital currencies issued by central banks could be linked to other countries a lot faster and easier than many of the current deals with correspondent banks would allow. This project by Swift to link digital currencies used by central banks is still in beta, but testing with a number of central banks has already been done. Bank Swift has also looked into the use of connected ledgers, which are also known as blockchain networks, and the settlement of tokenized assets is a faster way to send messages across countries. As a bridge currency, XRP can be used for cross-border trades, money transfers, and foreign exchange corridors. For a long time, Ripple has been pushing its on-demand liquidity service and the idea that it could be used as a bridge exchange. According to statements made public by Ripple officials, the XRP ledger could hold a large amount of the world's liquidity if banks and other financial institutions think it is better, faster, more efficient, and cheaper than the methods that are already in place. In this way, both Swift and Ripple are moving toward the same goal to make sending money between countries faster, cheaper, and more efficient. Even though these two groups want the same thing, Swift hasn't said in a public statement. We are now working with Ripple and plan to use XRP as a bridge asset or settlement token across our network. Not in Swift's public documents, technical specs, regulatory filings, or news releases do they talk about Ripple or XRP as being part of Swift. Plans in that role based on the information they have access to. There are signs that Swift is aware of the need for interoperability updates, and maybe even the need to work with or learn from companies that deal with blockchain. These include statements of purpose, proof of test projects, and other things. However, there isn't really an official deal in place that would make this a full-fledged partnership or an admission of loss. From what has been proven to what might be out there, let's move on. If it happens that should Swift and Ripple decide to make their straight GSC cooperation official, Swift could add Ripple's on-demand liquidity solution or make XPPL-based liquidity available as extra ways for cross-border payment routes to be routed. As long as the rules and economy make sense, this would let member banks of Swift use faster settlement methods through XRP. In places where there are a lot of money moves, a lot of trouble on the foreign exchange market, or high correspondent banking fees. For example, there are several ways that a cooperation can happen. Something like this could start to form. One place it might start is in a growing market like Asia Pacific, Latin America, or Africa. People in these places want faster, cheaper cross-border activities more than anywhere else because their banking infrastructure is either not as good or costs more. From that point on, there was a chance that it could grow. A lot of different things need to come together for this to happen. To begin with, it is important for rules to be crystal clear. Not only does XRP have to follow laws against money laundering, know your customer rules, and fiduciary risk rules, it also has to follow the banks and financial rules of many countries. Banks need to be sure that using XRP won't put them in a situation where they could be embarrassed in public. Second, XRP needs to have enough cash on hand to be able to act as a bridge for big payments. The US dollar, euros, pounds, yen, and other big fiat currencies need to have a lot of reliable, deep liquidity. A large amount of business it will have to go through exchanges, operators, pools, and market makers. Third, the technology system needs to be able to grow. How fast deals can be made between chains? How many purchases happen across chains? How much data is used in cross-chain transfers? How closely activities in different chains are linked to each other? The fact that towns across chains stand and how well tasks from different chains are linked. In the end, economics has to be a reasonable field. It costs less to switch, deal with counterparty risk, deal with price risk, and hedge XRP when you use Ripple's infrastructure instead of when you don't. Furthermore, to get institutional acceptance, member banks of SWIFT must be shown that using XRP-based routing really does add value. This could be done through test projects or proof of concept. This could mean lower fees, faster settlement, less danger, and a better experience for the customer in general. That being said, let's say that all of those things happen. What is the scale might be going to look like? What should be done next? Right now, SWIFT handles cross-border payments worth trillions of dollars every day all over the world. In some ways, even a small part of that flow could be changed or settled using XRP. This would make a lot more people want to use XRP as a bridge exchange. It is possible that you have to keep XRP on hand or use XRP markets and liquidity to make the payment and transfer processes easier. What the market does, it's much more important for makers, liquidity sources, managers, and exchanges. Some places may see big changes in the amount because they are currently dealing with a lot of money transfers or trade financing and high costs. Let's talk about the goals we've set for price aims now. For the price of XRP to hit 200 Zalals, there needs to be a lot of demand, not a lot of efficient XRP available, a lot of use, low risk, and good macroeconomic conditions. Even 1% of the daily flows that SWIFT handles would use XRP as their preferred bridge asset. This would lead to a huge amount of trade value going through it. It would be fair to think that SWIFT handles about 5 trillion in cross-border transactions every day. This is not an exact number, but it is a good guess for how much money is sent around the world. We also say that the way Ripple is set up and how liquid XRP is make it possible for about a $5 billion in value to move through XRP every day for settlement, bridge, and other reasons so that we can meet that